Hello students, I am Soumya V, Assistant Professor, Department of Commerce, Christ University, one of the facilitators of the course, Bridge Course in Accounting. Before I start off the class, let me ask you some questions. What do you think about the subject accountancy? Do you think that the subject is important only for commerce students? Or is it important for a common man as well? In my opinion, accountancy is nothing but the language of money. It helps a person to keep a track of how much money one earns and how much money is spent and the balance available for one's disposal on any day. You may be wondering then, isn't a basic knowledge in mathematics sufficient? From a common man's perspective, the answer may be yes. But as a person makes more and more money and start accumulating more and more assets, it becomes even more important to keep a track of not only the money earned and spent, but also to know how productively the money is used to earn better returns. Here comes the role of accountancy in the life of a common man. For a person who invests his hard-earned money into a business to earn better returns, accountancy becomes a language through which one's business communicates its results as well as its financial position. Thus, it becomes very important for every student who aspires to make a career out of commerce and business to have some basic knowledge about the discipline accountancy, its need, purpose, rules and process. So, let us start exploring the ever interesting world of accounting. What is accounting? According to the Committee on Terminology of American Institute of Certified Public Accountants, accounting is the art of recording, classifying and summarizing in a significant manner and in terms of money, transactions and events which are in part at least of a financial character and interpreting the results thereof. This definition clearly explains the meaning of the term accounting. We can see that accounting thus involves various activities which are as follows. Number 1, identifying transactions and events. What is a transaction? How is it different from an event? An event may be termed as an activity, while a transaction refers to an event which involves exchange of goods or services between the participants. For example, I run a provision store and you come to buy a 5 rupees chocolate. I receive rupees 5 and I give you a chocolate. An exchange of chocolate for 5 rupees is taking place here, which can be termed as a transaction. In accounting, we take into consideration only those transactions which can be expressed in terms of money. Thus, transactions which cannot be expressed in terms of money will not be recorded in accounting. For example, love between parents and children. In a family, both parents and children exchange love, but we cannot express them in terms of money. Once, when I was explaining this concept in my classroom, one of the students asked, "Ma'am, when my father gives me rupees 1000 as pocket money, can this be called as a transaction?" I asked him, "What are you giving him in exchange?" The boy said, "Love, maybe?" I asked, "If that is the case, can you say that you gave love worth rupees 1000 to your father and he gave you pocket money rupees 1000? The boy paused. I told, accounting is concerned only with transactions which can be expressed in terms of money or money's worth. If your father has a habit of maintaining books of accounts, he may record the pocket money given to you as an expense. But he may not actually follow the double entry principles of accounting, about which we will be discussing later. As I told you earlier, accounting is the language of money. To be more precise, accounting is the language of business, the language through which a business communicates its results with the people concerned. Since accounting is mainly used in the field of business, from now onwards, we will talk about accounting from the perspective of a business person. The second activity is Measuring the identified transactions. Once the transactions are identified, we measure them, normally in terms of the currency in use of a particular country. Being in India, we measure the transactions in terms of rupees. If you check the international transactions, you can see that they will be measured in some common currency agreed upon like dollars, euros, etc. After identifying and measuring the transactions, we record them. Though I have shown recording as a third activity, it is indeed the first and the most important activity in the entire accounting process. Transactions will be recorded in the books of accounts in an orderly manner as soon as they occur. When I sell you a piece of chocolate, I have to record them in my books as soon as the sale takes place and not after 2 or 3 days. If I don't record the transactions immediately, chances are there that I may forget about them or there may arise some mistake when I record them. If it is only one transaction or the matter is only of 5 rupees, we may not need to worry much. But a businessman deals with large number of transactions which involves huge amount of money. So, proper and timely recording of transactions becomes very crucial. In general, we use journal to record the transactions. The methodology of recording the transactions in a journal will be discussed in the upcoming sessions. Once the transactions are recorded, we classify them. Classification is nothing but grouping all the similar transactions together at one place. We use different ledger accounts in order to classify these similar transactions. For example, all cash transactions will be entered in a cash account, all purchases will be recorded in purchase account, etc. The next activity is summarizing the classified transactions. A businessman or anyone who is interested in the business affairs would like to know the result of the business or the financial position on a particular date. It will be very difficult for the person to check each and every account and arrive at a conclusion. To get a clear picture of the business affairs, we summarize the transaction by preparing financial statements like income statements, balance sheets, etc. A businessman would not only be interested in knowing the results and the financial position of the business, but also would like to know the strength and weaknesses of his business, which will enable him to improve his business in the future. This is possible only through establishing relationships among different items in the financial statements, which is called analysis of financial statements. There are various tools and techniques employed for this analysis, some of them being ratio analysis, preparation of comparative income statements, fund flow statement, etc. Such analysis helps the businessman as well as other interested persons to understand the significance of the relationships and also enable them to take important decisions about the business. Normally, this analysis and interpretation is done by the accounting department of an organization. Through this process, the department will be able to explain what has happened to the business, the reason behind such a business condition, and also what is likely to happen in the future in specified conditions. Lastly, the department communicates this information to the top management, who will in turn be taking reasonable decisions for the progress of the business. Hope you have understood the basic activities of accounting. In the next session, I will talk about basic accounting concepts and conventions. Happy learning. Thank you. See you in the next class.